Nvidia reported earnings yesterday. Let's talk about it. So yesterday, Nvidia had reported earnings and they blew earnings out the water, generating $30 billion in Q2. Now, this is a tremendous upbeat compared to last year in Q2, where they generated roughly $13 billion. So for those who know the initial story behind why semiconductors are the central focus of everything right now, is because of artificial intelligence and because the Biden administration enacted the CHIPS Act back in 2022. So during 2022, China was one of the major competitors in the space of semiconductors. Now, in order to be competitive, we needed to invest into the space of chips and semiconductors themselves. So the Biden administration, to make America more competitive, had enacted the CHIPS Act, and this allowed funding for the semiconductors here in America to expedite and build manufacturer plants, to build up companies that were focusing on the chip space. And as a result, Nvidia has taken the forefront, the lead when it comes down to the face of semiconductors. Now, in this last quarter, let's talk about what led to the growth as far as the $30 billion in revenue. So when we talk about as far as what drove the revenue growth for Nvidia, we look at that Nvidia had high demand for data and computing platforms and AI solutions, and also too specifically for the Hopper and Blackwell chips. Now, two of the major sources of revenue that comes from Nvidia is computing and networking, and graphics and AI solutions. Now, the computing and networking component includes data centers and AI solutions, which generated roughly $26.5 billion of revenue for Nvidia this quarter. Now, if we look at the computing and networking component of Nvidia's platform, we see that that is composed of the data and AI solutions. Now, this generated $26.5 billion this quarter compared to Q2 last year. They only generated roughly $10 billion respectively. Now, as far as the cash flow when it comes down to Nvidia, what they're doing with it, they've invested $19 billion roughly into repurchasing shares and also paying out in dividends. But as of yesterday, Jensen Huang and Nvidia had announced that they're doing a $50 billion buyback plan to repurchase shares, which is, if you're an investor, this is a tremendous benefit to holding the stock, because this also helps you as an investor to have value. Now, despite the fact that Nvidia had beat earnings, we saw that at the beginning of the trading day, we saw Nvidia was roughly at $128 per share, and by the time of the close, Nvidia went down to $125, and then the post aftermarkets, after Nvidia announced their earnings, we saw Nvidia get all the way down to $116. Now, let's talk about several things that could have led to this big sell-off that we had, right? So one of the things that could have led to the sell-off was high expectations. Now, despite the fact that Nvidia had generated $30 billion in revenue, a lot of investors were anticipating higher revenue when it came down to Nvidia's projections, due to the fact that AI has been the narrative that's been driving the market. Nvidia has been carrying the market in itself. Now, Nvidia did well when it came down to as far as beating earnings, but I think investors were anticipating a little bit more in relation to revenue. So this partially may have led to a stock sell-off. Now, the other part of it could have been as far as guidance, forward guidance in particular, and market sentiment. Now, going into Q3, Jensen Huang had projected they're looking at as far as generating $32 billion in revenue. Now, this also could have been the reason why the sell-off started to take place, because if you look at Nvidia's track record over the last fiscal quarters, Nvidia has done pretty well. Starting from Q3 of 2023, we saw that Nvidia was roughly generating $5 billion per quarter. And as we look forward, the margins began to grow. In Q1 of 2024, we saw that it went to roughly $6 billion. Q2 of 2024, we saw $7 billion. But then you start to see the exponent begin to grow. So Q2 of fiscal 2024, we saw that Nvidia went from $7 billion a quarter to $13 billion a quarter. And Q3 of 2024, we saw $18 billion. So roughly a $5 billion jump in quarterly revenue. And then we saw in Q4 of fiscal 2024, we saw $22 billion in revenue. So another roughly $5 to $6 billion jump in revenue. And then we also saw in Q1 of fiscal 2025, we saw $26 billion. So another $4 billion jump in revenue. And then also in Q2 of fiscal 2025, we saw it went from $26 billion all the way to $30 billion. So we've been seeing increments of $4 to $5 billion in jumps per quarter when it comes down to revenue. But in this Q3 quarter, we're seeing that it's only a $2 billion jump in revenue. Now, this is possibly a reason for some people to speculate of concern, because we're starting to see that growth is slowing. Now, year over year basis, Nvidia is up 150%. But if you look at as far as their returns off the quarterly basis, so if we look at Q3, or if we look at Q4 of 2023, we saw that from Q4 of 2023 to Q1 of 2024, we saw a 45% increase as far as in growth. But when we look at Q1 2024 to Q2 of 2024, we only saw a 12% increase. So many people are speculating that we're starting to see that growth is slowing. And then if you factor in that Jensen Huang has said that they're looking at possibly $32 billion in revenue in the Q3 earnings report, that this is possibly one of the reasons why some investors may see that growth is coming to an end. Well, not only that, the third reason that possibly could have led to the sell-off is the valuation. Now, if we look at Nvidia's valuation compared to its peers, it is relatively high. Now, when we look at Nvidia's PE ratio, the valuation is still relatively high. Again, when we look at as far as its peers, when we look at as far as Taiwan Semiconductor, their PE ratio is 27, Broadcom is 69, Qualcomm is 21, AMD is 175, and Nvidia is 73. So relatively compared to its peers, it's still overpriced based off of PE ratio. Price to earnings. But at the same time, that doesn't per se mean that the business itself is overvalued, because PE ratios have two implications. Either it's overvalued or they're pricing in a lot more growth ahead of itself. But if we're also looking at, the fact that Nvidia is beginning to slow down as far as in growth, some investors may see this as an opportunity to now take some profits off the table. Compared to AMD, Nvidia is doing fine in relation to as far as PE ratios, right? But as far as growth, many people are speculating that Nvidia may be slowing down, and it could be a reason to take some profits off the table. Now, another thing is, I think that some investors may be worried about is that 40% of Nvidia's revenue is only coming from 6 companies. You have Meta, Amazon, you have Apple, Google, Microsoft, and Tesla. So if you have 40% of your revenue based off of these 6 companies, that to me is kind of a little concerning, because if any of these companies decide to tailor back as far as research and development or capital expenditure, this is something that could possibly affect Nvidia's bottom line dollar. And if we're also seeing that they themselves are having trouble with pushing out Blackwell, which is one of their products that they've been toting around, sentiment can change around as far as asset allocation or capital expenditure. But anyways, this is my take on Nvidia. I hope that you enjoyed the video. Be sure to like, comment, subscribe, and share. I'll greatly appreciate you for doing so. Be sure to check out another episode of the O.W.L podcast soon to come. Thank you for your time. Bye-bye.